So welcome to our compliance conversations in the midst of COVID-19, hosted by ILSA Inc. and Spot On Insurance. Today we'll be covering agency compliance for after the sale.
Yes. So thank you everyone for joining in. We have about 20 people that I can see participating. This is typically an hour session, but we can go on longer. You know, I know that we're going to be talking about some pretty heady stuff and some complicated stuff. So we're open to having it stay on longer. Your mic.
As long as our panelists are too.
Yes.
We understand if you need to go after that hour, because we usually do it an hour, but if the topic is really exhilarating and you don't want to go anywhere, please don't. We'll be happy to continue the conversation.
And if you guys can use the question and answer icon down below to put in any questions that you may have. And on the chat, you could just say, hey, Arleen, I love your shirt, whatever. And so Ted, if you will introduce everyone that.
Well, normally General Manager Russ Foster is here, but he's had to be away. We've got Caribou Honig from Chairman and Co-founder InsureTeck Connect. You'll know him by the little fedora. That's how we found him at InsureTeck Connect, actually. He said, just look for the hat, you'll find me. And he was absolutely right. We've got Danielle Hoversten, CIC, President and COO of Windemere Insurance Group. Welcome, and thank you for joining us. Pete Thrane, we've known for how many years, Pete? Like 20-something years.
I can actually tell you the exact date.
Oh.
It was June 12th of 2000, my first day in the law firm. And as I was walking around the corner, they were taking me to my office. The phone was ringing, and it was you. Had been referred. So the first phone call on June 12th, 2000.
That is just amazing.
And Pete Thrane is a partner with Stinson.
Yeah.
Is it still just Stinson?
It's Stinson.
It is just Stinson, right.
Okay.
When we first met you, it was Leonard Street Dinard.
Yes, that's right.
And Mark Trinka couldn't attend today. He's dealing with all those.
Some serious flooding.
Yeah, all the issues from the Michigan dam breach of the dam.
The dam breach of the dam. Okay, what are those?
So guys, in the past compliance sessions that we've done, we've gone over a lot of the COVID-19 updates with respect to the bulletins that are being disseminated like on a daily basis. We've actually given you guys updates in terms of licensing renewals, the extensions and whatnot, but we're not gonna go over those. But I would love Joyce to show where we host all of those bulletins in case you guys need to look at your particular state's updates. She'll share the screen and show our ILSA newsroom.
All right. Okay, so here we go. This is our ILSA corporate website. We have a tab here on the ILSA newsroom, and if you'll scroll down just to the state regulatory bulletins, you will see that as we receive those, we upload those here to the system for you to be able to keep up with everything. This is your one-stop shop for all of the state regulatory bulletins. You can see that we just updated today. There was one from yesterday. All right, so that's the ILSA newsroom. And then the other section I would just like to share with everyone, again, this is a one-stop shop right here. This is the contact information for every state. Our marketing team has been excellent about staying on top of any changes. If the state moves, new address, new phone number, new email addresses. So I'll click here on Alabama. We have the information for the Department of Insurance, email and website, the licensee search page, Department of Revenue, we've got phone number and email, Secretary of State, same thing, business entity search. I'll show you real quick. If you click on that, it takes you directly to the Alabama Secretary of State search page, and you can search for your company right there. Let me get out of that. Go back there, and so we have all of the states here. Great tool to use right here if you are in a hurry and you need to get to one of the state regulatory offices. We have that information for you.
Okay, some folks that couldn't join us today.
Thanks, Joyce.
Thank you, Joyce. Have sent in their questions to ccquestions@ilsainc.com. So, Sabrina, can you start us off with some?
And you have your mic muted.
Uh-oh.
Well, there was a train that went by, not a train, or a big loud truck. So I was like, oh, that might come through.
No, we thought you were going to mime the whole thing.
Oh, no, never. Although I do kind of fit the, sorry, focus. All right, so we do have a question. Our first question is, I canceled my license. Why do I have to withdraw from the Secretary of State? Doesn't canceling my license show that I no longer do business in that state?
Thank you, Sabrina. That I did ask you to start with that question from our panel. That is a great question, and the answer is no. It doesn't necessarily mean that you've gotten out of the state just by notifying the Department of Insurance. I know we've got agency owners and producers here that their life is centered around insurance, the Department of Insurance. So naturally, they are under the impression that when they notify the Department of Insurance that they're done doing business in that state by way of like a surrender, they think, well, I'm done. Well, chances are that you are or probably should be registered at that Secretary of State as well. So you would have to let them know as well that you are withdrawing or removing yourself from their state. And there is an entire process around that withdrawal, and that's the majority of what my content will be about today.
Awesome. Well, I have another question, and I'm super excited about it because I get to pick Pete Thrane's brain for once. So I'm going to direct that to you. What are the two forms of agency sale transactions?
Well, hello, everybody. There's two forms. There's an asset sale and a stock sale. And the wind down activities depend a great deal, depending upon which form of a transaction that you select. It's worthwhile understanding upfront what the post-transaction obligations are when you pick the form of a transaction, because they're materially different and they have materially wind down obligations. A stock sale is simply selling the shares of stock that an agency owner owns in a legal entity that is licensed as an agency. So when the owner sells their stock to a third party, that everything that goes in that corporation, all the assets, all the liabilities, everything goes to the buyer, and the shareholder, the owner that sells them, really has very little, if anything, remaining. Unfortunately, buyers prefer asset transactions. An asset transaction is much different. That's where the legal entity that owns the agency, the legal entity that owns the assets of the agency sells their assets to the buyer. And instead of buying stock in a legal entity, the buyer is buying discrete assets from the agency. In many cases, the buyer doesn't need all of the assets of the agency. They just want certain discrete assets, particularly if it's another agency that's buying the other agency, because they have the platform. And so what they really want is the business. And so typically in an asset sale, you would see a transaction involving the sale and the rights to the expirations, which is the key asset of an agency that gets sold, is rights to the expirations, all the books and records. And then that's typically coupled with some restrictive covenants, which would be a non-compete, a non-solicit, a confidentiality. And that transaction, they're really selling intangible assets. That's the key element of the sale of an agency, is selling the book of the business. From time to time, you also see them sell physical assets, such as real estate, perhaps, or owned equipment, furniture and computers. You can see maybe assignment of office furniture, assignment of leases, assignment of software agreements, all kinds of third-party contracts. It may well be that a buyer says, you know, this agency has 4 offices. I need these two I don't want. And they actually want to take over the leases and buy the property, buy the assets in those 2 offices. And so it gives you a great deal of flexibility to buy individual assets versus buying the entirety of the corporation. I will say there's a lot more work in running off and in closing down an agency after an asset sale than there is after a stock sale. After the stock sale, you give them the shares of stock, you get a check, you probably have some restrictive covenants, but by and large, with the exception of that agent's, with the exception of his license, there really is very little in terms of regulatory implication because it all goes with the legal entity. Sabrina, I guess that was a long answer to your question. I hope I covered what you needed. I hope I didn't cover too much.
Oh, you're miming again.
Oh my goodness, that was a wealth of information. Thank you so much, Pete. I really appreciate it. We did have another question come in. This one is from Tisha Hills. It's more from the insurance industry side. So Joyce, I'll switch that kind of back towards you. Tisha asked, I just wanted to know, when it came to an insurance agency or broker office, what are the consequences of not having jurisdictions in all states that they are selling in?
Pete, would you like to take that one?
Why don't we team on that one? I think the answer to the question is, if you're selling insurance in a state where you don't have a license, you're in violation of the law of that state. But Joyce, I will ask for you to confirm that.
That actually goes into what constitutes doing business in my state, which is something I am going to touch on just a little bit, but was not going to be a big focus of our conversation today because we can talk about that for days, literally.
Hey, Joyce, hang on just one second. Caribou, I would like to ask you, when you are investing in InsureTeck, does the conversation around compliance come up regularly? Tell me what you hear from all of these startups.
Yeah, so thanks, Arleen. There's probably a reputation out there that startups and VCs are kind of, oh, regulations don't matter, we'll break it and fix it later, right? The sort of Uber approach from a few years ago, maybe, where, okay, we'll sort of ignore, we're not going to break the law or the regulation, we're going to ignore it, right? And beg forgiveness afterwards and explain why it doesn't apply to us with a smile on our face. In the insurance and InsureTeck sector, right? I actually think that approach is kind of a myth. Right? I think that most entrepreneurs, right, who certainly the ones who are seeking to get venture capital backing, they are trying to build something that is sustainable. And maybe it's a little bit more obvious that insurance is regulated, right? And those regulations are clearly and eagerly enforced, right? Compared to like the ride-hailing world and such. And there are people around, InsureTeck's, I think it was Zenefits maybe a few years ago that got more than their hands slapped, right? For their sort of approach and an attitude around it. So I think that the entrepreneurs are trying to build something sustainable, and they know to do that, they need to build something that is compliant. Right? I think that the investors, right? Look, as an investor, you're scared, you're always motivated by the little greed angel on one shoulder and the fear angel on the other. And the fear one, right? One of the big fears, right, is what's the regulatory environment, what's compliance, and especially where a company is trying to really innovate, right? So I think there's one category, which is the startups, the InsureTechs are trying to innovate, but they're doing something that fits squarely in the regulations. They know what to do. And for the most part, I believe they do it, and the VCs insist on it. And it just becomes the question of what's the best way to comply, right? You might see them try to do more of it in software rather than people, right? And I think that's the biggest difference there. The other piece is sometimes the entrepreneurs are trying to do something that's a little bit more out there, more different than what the regulations themselves were designed for. And in that case, I think it becomes a little bit trickier where you say, the spirit of the regulation is not at odds with what the startup is trying to do, but it technically violates the letter of it. Well, then what do you do? I think that's actually the tricky part. I remember hearing about one like on-demand insurance provider, right, trying to innovate, and they were trying to make their insurance. You want it from 2 p.m. until 6 p.m. when you're going to be doing something, great. Except that one state had a law on the books that insurance had to start and end at 12:01 a.m. Right? And so that's one where it's like, well, I don't think that this InsureTeck is innovating in a way that's meant to defraud the customer or fool anyone. Right? It's sort of right in their face that it starts at 2 p.m. Like that's the point of it. But it was still technically running afoul of the regulation. I think that's where the trickiest part comes in for it.
Yeah, and look, even for us, I mean, obviously we've had lots of traditional insurance agencies as clients for many, many years. And even for them, when they have acquired other businesses, they focus a lot of times on the financial due diligence. And we actually set up a whole service, quarterly compliance reviews, because we had so many clients that were doing acquisitions. And one of them one time said to us, we wish that you would have checked all of these things even before we did this acquisition. And so we said, oh my gosh, this is so needed. And so we started that quarterly compliance review and going in just when there's mergers and acquisitions, and doing all those checks with the Secretary of State and the Departments of Revenue.
Yeah, the startups I've seen are always trying to figure out sort of what is the right kind of entity that they want to be. And part of that is a question of what's the regulations that they want to subject themselves to. So a lot of the InsureTechs, the customer-facing InsureTechs, are agents or brokers, right? And that's actually for them the lightest regulatory sort of framework they can live in. Then you see some of them become MGAs, right? Which I think has them really owning more and being subject to more. And the very latest trend, you really have seen at least a handful of these InsureTechs integrate all the way and become carriers. I'm an independent board director on one InsureTech startup where, yeah, I had to get fingerprinted because they made the choice to light up a reciprocal, right, to basically be a carrier. And that meant that, as a board member, that's one extra regulatory hoop that I'm going through, but it's the right structure for what that company's trying to accomplish.
Back to you, Joyce.
Okay. Before I go into my content, which is taking down your agency, if you're the seller and need to wind down your agency, I do want to hit Tisha Hale's question really quick, because I was going to mention this a little bit. I'm going to screen share again just for a moment a really neat PDF. This is from our friends at Wolters Kluwer. This is one of the registered agent affiliates that we have, CT Corp. I use the book version of this, but it's older. It's 2014. I know it's been updated. I believe this is a 2016 version, and I've not been able to find a newer one. However, there is some really great information in here. Tisha, I'm going to copy and paste. I'll stop sharing real quick, and I'm going to put that in the comments for everyone. If you want to copy and paste that link and pull that link. But like I said, I've got an older version of the book here, but I just want to tell you they do talk about doing business, the definition of doing business on a state-by-state basis. That's very important. They have reference to many of the state statutes, and the state statutes, that is where your answer lies, and that is where you could call the state, you could call me, and you won't get an answer from them either. We can't tell you specifically based on the way you're doing business that you must go and register with that Secretary of State. It is literally buried in the statutes. So we always encourage our clients to get out there and look at the statutes, get with their legal counsel, and go through that very clearly. A lot of states have a list of exemptions, and many of the exemptions are the same from state to state. So if you go through that list of exemptions, you may find a way for your agency and the way that you do business that you could be exempted from registering at the Secretary of State. No doubt many of you are aware that several departments of insurance required you to register with the Secretary of State before they would even give you the agency insurance license. New York comes to mind, Massachusetts, that's two of them I can think of right off the top of my head that require you to register with the Secretary of State before you can get licensed. Virginia is another, however, they will let you get your registration before or after, but you have 90 days, and if you don't comply within 90 days, you lose that license. They'll cancel your insurance license for not having registered with the Secretary of State. But having said that, I want to say, just because one of the departments of insurance did not force that registration upon your agency as a prerequisite to licensing does not necessarily mean that you don't need to do it. It may still very well be required of you. And again, the only way you're going to know specifically is to get into those statutes, read them word for word, see if there are a list of exemptions, see if you fit any of the exemptions. And Pete, do I have a second to that opinion?
Yeah, there's some uniformity, but they vary just enough that you do need to look at it on a state-by-state basis. And I think it's important to sort of note that doing business for purposes of a corporate qualification, which is what you're talking about, can be different than what is doing business for purposes of insurance regulation.
Sure.
And so you need to read them together. In some cases, in a lot of cases, they overlap. And typically being qualified to do business as a foreign corporation is not particularly difficult. So in the event of there's any ambiguity, I think that the preference would be to get qualified, because the consequence of not doing so, isn't terrible, but it's a hassle. And so I just want to point, you need to read both the insurance law and the corporate law.
And just to piggyback on that, one of the things, like Joyce mentioned, is that many states don't require it as a prerequisite anymore to getting that license, which is bad, because before the tendency was you had to get that CQ, that corporate qualification, before you could get that insurance license. Well, a lot of states said now you can get it afterwards. The problem is, once an agency gets that license, they think they're good to go. And that's where we have seen lots and lots of problems, is when then the Secretary of State reaches out and says, oh, you've been doing business here for 2 years and you haven't qualified with our department. Big no-no.
Right. And one of the main things that I see that I read and hear every state says, unless you meet those exemptions, is if someone were to bring a suit against your agency in that state, you very likely would not be able to defend yourself because of that lack of qualification. You never registered for a certificate of authority to conduct business in their state. So now in some states, they'll allow you to register late. You can go ahead and register just in order to go defend yourself, but in other states that it's still not an option. You didn't do it when you should have, basically, is their stand. But anyways, I hope people take advantage of that PDF link that I sent. Get in there and look at that. Talk with your legal counsel about the Secretary of State registrations, because in our world of compliance, those are equally as important as being licensed, insurance licensed to sell. All right. Sabrina, if you don't have any other questions, I'll just kind of start diving off into the rest of what I wanted to talk about.
Yes, that sounds great. Right now, I don't have any other questions. Attendees, please feel free to ask away. I know any of our panelists would be more than happy to answer your questions. So take it away, Joyce.
All right. Thank you, Pete, for explaining the difference in the sales. That's definitely something I could not That's all legalese that I really can't get into. My life is centered around licensing and compliance. So that's what I want to talk to all of our attendees about today. My content is specifically geared to the agency seller who is still left with that business entity at the end of the sale. And they need to take that agency down. And you'd be surprised at how many emails I get or phone calls I get from even our existing clients that say, hey, Joyce, I sold the agency last week or last month or last year, and we don't need you anymore. Thanks for all your help. Thanks for everything you did. And my response is, that's amazing. I'm so happy for you. That's really cool. Especially if they're going off to retirement, I'm really happy for them. But one of the first questions I ask them is, okay, if this was an asset sale and you were left with that agency, you're actually still the owner of the agency itself. Who's taking it down for you? You need to wind it down. You need to get out of the Department of Insurance. You need to get out of the Secretary of State. You need to get out of the Departments of Revenue, and I mean plural, in all of the states that you're registered in. Before you can go have margaritas on the beach. So who's taking care of that for you? And if your answer is, I don't know, then we need to talk, because I can help you with that. So typically I first talk to them about their licenses, getting rid of their licenses or surrendering their licenses. Before I get into that, what I will say, I want to start off with this and say, please, please, please do not do this immediately. I know the lawyers are going to say, dissolve. You need to go dissolve. And you do. You absolutely do. That is one of the first steps. However, don't do that until you personally or someone personally has looked at your compliance. And by compliance, I mean not really so much even the insurance, the status of the insurance licenses. I am talking about the Secretary of State registrations and the Department of Revenue business registrations. If you are not up to date and you have any sort of revocation or forfeiture out there that you would have been able to flip and put into a good standing before withdrawing, once you dissolve, once that domicile state is taken down, you are unable to go flip those bad statuses, the revocations and the forfeitures. So if a client comes to us and says, I'm looking at selling, we always suggest a compliance review. Basically, we're just telling them, let's make sure that your house is clean before you put this out on the market. It looks good for you, for the buyers. It's going to be good for you in the end when it's time for you to take your agency down, if that falls upon you. So for a compliance review, you could do it pre-sale or even after the sale. You still need to do a compliance review before you dissolve in the domicile state. And a compliance review is simply go to all of the Secretary of State websites. All of the Secretary of State stuff is online. You can search your business entity and they're going to give you some sort of status: active, inactive, revoked, forfeited. Hopefully they're all active and in good standing. And in order to keep them active and good standing, you would have had to have taken care of your annual returns or biennial returns. So check the Secretary of State. Like I said, that's online. The Department of Revenue, now that's a little tougher. Okay, it's a lot tougher. I heard the chuckles. It is a lot tougher. That's going to require emails, phone calls, repeated phone calls. It's not their fault. It's tax time right now. And then we've got COVID and all these other things. They were already backed up before this happened. So for the Departments of Revenue, you want to make sure that all of your corporate and franchise tax returns are caught up to date. You've paid the taxes. If anyone but an agency officer is calling to find out information, in a lot of states, they're going to require a power of attorney. It'll be like a limited power of attorney form. And that even goes for the secretary that's sitting in your office. That's not just for a third party vendor that needs those. If the secretary is calling and wants to find out financial information from the Department of Revenue about the business entity, she herself would need one of the officers to sign this limited power of attorney to give her permission permission or give the Department of Revenue permission to give her some information. So just be prepared for those, the power of attorneys. And then as long as everything's good at your at the Department of Revenue, then when it does come time to withdraw, you should be able to get the tax clearances that you're going to need as part of that process more easily. Not fast. I'm not saying fast. It's not going to be quick. Even in, you know, a perfect scenario, Pennsylvania, it just takes a year. I mean, that's just it. I don't know why. I'm sure there's a lot going on there. I know that there are 2 tax clearances. Sabrina, you can back me up on that because your department handles that stuff. In Pennsylvania, you've got Department of Revenue and Department of Labor tax clearance, right? And so from the time you ask for those and they do all their reviews and all their audits and they determine you either still owe something or no, you're in the clear, here's your tax clearances, literally can take a year easily. Another one that's getting into that year is New Jersey, but they have a little tax amnesty thing going on right now. I'm gonna touch on that a little bit later when I get to that part, and I'll share some info on that. If anybody's having any trouble in New Jersey, you have until June 30th maybe to get out of some hot water. So anyways, yeah, don't let the first thing you do be the dissolution until you know for sure that everything is up to date and in good standing at the Secretary of State and the Department of Revenue. That way, once you dissolve and you start doing your withdrawals, everything's going to be smooth. Not quick. Again, I'm going to repeat that. It won't be fast, but it could at least be smooth. Okay. We have seen where the dissolution happened, but there were, unfortunately, you know, some statuses like a revocation or a forfeiture, and that was unknown to everybody before the powers that be did the dissolution. Danielle, you faced something like that with your former entity, didn't you?
We lived through everything you're talking about right now, and I would start with saying thank you so much for this webinar, and I hope that this spreads like wildfire for any agency that's selling, because if I had heard this webinar as we were winding down and getting into that process post all the financial due diligence, and you know, when we looked at compliance due diligence, we talked for a minute about licensing. It was not a big topic in our due diligence process, and that was really a mistake because we didn't understand how much there was to winding down, and we had been in business for so long. It just, you know, we were complying with everything that we knew that we needed to comply with, but I really equate the good work that you all do with outsourcing your payroll. You know, you can't keep up with every single thing around payroll, and so you don't do it. We outsource our payroll, and that's what we do. And this is very similar in this world, especially if you're going through an asset sale, Pete. You're exactly right. When you do the asset sale and you start unwinding that, you have old co and you have new co, and it is still going, and you've got to figure out what is it that you need to do versus what do you need to do with your new partner. They're going to have a compliance checklist for you, and it's not going to include your old co licenses. You have got to spin up your own compliance list and go through that list and assign specific responsibility, whether that's outsourcing or internal folks. And if that's an internal FTE that's going to manage that process for you, it's very unlikely that your new co is going to pay for it. So these are things you need to plan for as you go through this process. It really was much more complicated than we expected it to be. We're so thankful that we had a resource that we could go to help us untie it. We thought we had time. Also, it takes a lot longer than you think it's going to take to go through every single state and make sure that you're in good standing and then withdraw. If you think you have a few years, depending on how your sale is structured or how your final sale is structured, you're going to be on a timeline with your dissolution just because you're not in good standing in a state. If you need to be dissolved so that your tax basis can be used for your owners, you're going to be under a time pressure. And so it's something to really plan for.
That's really good information, Danielle, because that's something that every agency owner should be aware of, because in pricing, they need to know that they're going to have a huge amount of money that they're going to need to dissolve all of this all of the licenses, the withdrawals with the Secretary of State, they're going to have to invest time and money in that.
Absolutely.
Can I emphasize one of your points?
Sure.
Yes, please.
When a shareholder dissolves their corporation, they have to represent in a dissolution filing that they provided for their liabilities or otherwise settled their liabilities. And if there's a lot of these dogs and cats outstanding, it seems to me very difficult that you could honestly represent that. And there are implications of dissolving a company before you've settled all of your liabilities, i.e. they come back personally. And so it is really important that you get all of these items nailed down before you file those articles of dissolution. Another thing I think that sort of suggests why sooner and quicker isn't the best necessarily is in your sale agreement, there probably were representations and warranties made. There probably was a time period under which those representations and warranties survived. What that says is that over some period of time, 2 years, 18 months, 12 months, 6 months in the shortest time frame, if those representations and warranties are not true, there's a liability under the contract for any damages caused by that breach. So query whether you can actually file articles of dissolution while your reps and warranties are still have survived under your purchase agreement, which suggests that, a quickly turning around and dissolving the company isn't prudent and actually shouldn't be possible.
Shouldn't some things in life be easy? Like, you've got a good business, you've been building it for a while, it's actually, people want it. Shouldn't you be able to snap your fingers and sell it and just be done and have those margaritas? Right? It's just sort of striking to me. I've sort of been an investor, seen companies exit, good and bad, and like the one common thread through it all is how much darn work it is to actually exit the company. Even if it's a great company, even if you've got buyers lined up, it's still a lot of work. Like, you got your day job of running the company and selling it, right? Like, that's an extra job for the management, for the owner, for the CEO too. And now you're saying it keeps going after I've sold it. Wow, now it's really a lot of work.
And not for just like a month later, but it could be a year, 18 months, that's.
Caribou, I need that nifty background that you had earlier. Come on, bring it out.
When I was in-house, I had a boss who used to say that the insurance business isn't that hard to get into, but it's brutal to get out of because there's tails on the business.
Right. And Pete, you being an attorney, I'm super excited to hear that's your point of view and that's your stance on the dissolution, because when clients would call me, the first thing I tell them is please try not to dissolve until we're done doing what we need to do. Let that be your last step. And inevitably I get, constant follow-up, really, where are we at? The attorneys are pushing us to hurry up and dissolve. And like I said, in Pennsylvania or New Jersey or a state like that, you're a year out. Danielle, the work that we're doing with you, that's over 2 years in the making, and there are still 2 states we're working on, still 2. So 2 years, but it's that level of complication on a state-by-state basis, and we can't make any warranties about how fast we're going to get, a company out. But so I'm excited to hear one attorney say, no, wait for the dissolution, instead of the ones I've been hearing for, they're like, hurry up and do it.
You're going to have a lot of haters, Joyce.
I'm sorry. It is what it is, right? Okay, well, if y'all want me to move on to licenses, I talked about my first point, which is don't run out and dissolve immediately. Thank you, Pete, for the backup. So licensing, I want to talk about licensing real quick. I always say surrender the licenses, surrender all the licenses, but that's me. I'm extremely compliance minded. I'd rather be over compliant than there to be any shadow of doubt or any wonder from the state about what's going on here. So I will say this, producer licenses, so that's just your major lines, PNC or credit or life and health or something like that, you can allow those to just simply run off, expire, whatever term you want to use. Just understand that the timing could drag on for a while. Arizona is a 4-year license. If you are an agency that for whatever reason, maybe you're winding down from the foreign states or the non-resident states, but you're going to stay alive in your resident state and you are not going to cancel that resident state license, but you want Arizona to expire, it could be 4 years before that happens. If you want to surrender your resident license, just, understand that if you're only surrendering the resident license and not the non-resident licenses, they won't just necessarily be given an expired tag or canceled. I mean, it could be, a different status, and one does not come to mind. I wish I could think of one that I've seen in the past, but on the license side for producer licenses, it's not necessarily a black mark. What could hurt you later is if for whatever reason you want to spin up in those states again, then you're going to be facing reinstatement fines and penalties versus having surrendered it. And then if you decide to spin up later, you just go and reapply for a new license at the time without the fines and penalties. Anything beside a producer license, I would absolutely 100%, and my clients hear me harp on it all the time, I say surrender, 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 especially surplus lines. And I know not everybody on this call today or the attendees are in the surplus lines market, but for those who may be, I do want to say, if you are going to take your agency down, you have surplus lines licenses, whether it be individual or the business entity surplus lines licenses, if you don't surrender the licenses, then as long as they are still active and in good standing, you're required to continue the reporting, even for zero business. So for example, Pennsylvania surplus lines requires a monthly report. If you stop doing surplus lines business and you're no longer operating in the state of Pennsylvania, you have no business to report, you want to walk away from it, but you fail to surrender that license, and maybe it doesn't expire for 2 years in October, 2 years from now, Pennsylvania is still going to expect to see those monthly zero reports from you for that business entity. So you don't want to incur those kind of reports, because when you don't report, and I'm not saying this specifically about Pennsylvania, but I'm saying some states, if you don't do the zero reporting, what comes next? A penalty. And with a penalty, a lot of times is an administrative action. And who wants that? Nobody wants that, right? Even if you are going out of business, the way I think about it is somebody that spent years and years and years of their life to build up this awesome agency, and they've sold and they're making money on it. Who wants to drink margaritas on the beach? But that there's all these tax implications or report implications and administrative actions coming out. That's why we want to get you out of those states the right way, or that's why I preach about it.
Well, Joyce, I think the insurance industry invented the domino effect, where you hit that first domino and then it's
yes, yeah, for certain on the administrative actions, no doubt. So yes, surrender your surplus lines licenses to stop the reporting requirements. If it is a monthly state and in a state that requires an annual as well, if you surrender your license in May, maybe you had to do your January, February, March, April, May monthly reports, you'll also need to do the 2020 annual report for surplus lines, and then you're done. You don't have to do 2021. If it's a quarterly state and you surrender in March, you don't have to do a second, third, and fourth quarter. Or maybe you don't have to do an annual, but it all depends on what day, exactly what day did you surrender that license? When did it expire? So when I said earlier that you could let producer licenses run off, this is my exception. This is where I feel like this is a true exception to that, and where I say you need to surrender these licenses no matter what the license type. And that is for those states that required you to register with the Secretary of State to get the license. Because envision this, if you let your producer licenses run off and New York doesn't expire until 12/31 of 21, but yet you withdraw at the New York Department of State in 2020. Well, now you've still got an insurance license. I know you're not doing business, you're not soliciting, you're not doing anything, but you still have an active license in a state that had required you to get a Secretary of State certificate of authority to do business in order to get that license. So now the business registration is withdrawn, but the license is still active. To me, and I've never called New York and even asked them this. I mean, I have to feel like it's kind of a duh. Yeah, you should definitely surrender that one. Maybe I'm wrong.
Man, we have so much fun with compliance.
Don't we? I love to talk about compliance. My husband hates to hear about it. When I told him I was doing a webinar today, he said, that's right up your alley. You like to talk. And I said, yeah, I know.
I see Tisha. She says, I love Joy. She is great.
Thank you. Okay. So regardless of the sale, more than likely your individuals that were with your entity are probably moving over to a new entity. So then you're kind of thinking about the affiliations. The new entity or the acquiring entity or company will take care of the affiliations to the new stuff. There may have to be some severing of individual affiliations on your end. Typically, when you surrender the agency licenses, that will sever the affiliation. To me, that's a no-brainer. However, I have seen, can't think of what state, I've seen it in 2 states, where the agency license was canceled, yet that person still has an active affiliation to that agency license. I don't know how that happens. I don't even know how that's possible, but I have seen it. So you want to be mindful of some affiliations, of severing or terminating affiliations of any individuals that move over. Hopefully it's taken care of with the license surrenders. But for you that don't want to surrender and save the money and leave the license up, they're still affiliated to you. I just want you to know that.
You know, I think we could make a guide, like for agencies, like here's what you need to do when you're about to wind down.
Not about making a checklist, but every time someone calls, it's always different. It really is. Everyone's situation is so different. So I can't just go down this one checklist. It really needs to be like a org chart or something, like answer this, yes, go over here, no, go down here. You know, that I need to build something like that. It's all stuck right here now. This is where it's at. It's stuck right there.
Hey, Joyce, can I ask a question?
You can.
Yeah, so using my panelist role here to actually ask the question, though, sometimes I believe that different agencies, brokers use different technology, different systems, different platforms that they run themselves on. And so, when there's an acquisition, presumably there's some shift over from one system to another, maybe porting some of the data, maybe porting just how the people themselves work, the workflow and such. Do you ever see sort of compliance issues arise sort of coming out of the technology platform decision that one agency or the other has been using? Or is that just sort of not so much of an issue?
I haven't really seen that. Usually the agency that's doing the acquiring, they've been doing it for a while, so they've already got all of the little nooks and crannies taken care of in their system. You know what I mean? They're prepared for pretty much everything because it's not their first time. You know what I mean?
Mm-hmm.
You're muted, R. You're still muted, R.
I got it. I could see that, like, let's say you're in surplus lines and you have a system for that, and the acquirer, if there's pieces that it didn't pick from that agency management system, and that's what they have, a lot of different agency management systems, that could be a problem. But like you said, most of the times these acquirers already, that's definitely the data that they're making sure that they get.
Okay. I'm going to move on now to the actual withdrawal portion of this. as relates to the Secretary of State and the Department of Revenue. So if we don't have anything else to talk about on the licensing side, I know there wasn't a lot of content there. I mean, basically my stand is just surrender. If you're leaving the state, surrender your license. Just do it. I think there's only really maybe Alaska and maybe Pennsylvania are the only two states that even have a state fee. It's free. And the other good thing, half the states don't have a form. You just put it on a letterhead and say, my name is such and such, my business entity is such and such, here's my my license number, we want to surrender, thank you, and email it. I mean, there's not a lot to it. Yeah.
When you're talking about surrendering the license, you're talking about the business entity license, not necessarily the individual producer license.
Correct. Unless that individual is going to retire, then yes, they should take care of theirs as well. Yes. Sorry. This is what happens when y'all let me drone on and on and on.
Question, Joyce and Sabrina. So there isn't an online portal that you can just, through NIPR, that you can just cancel all the licenses online? No. So it's really a manual process.
It is. Every state's got their own specific form.
Yeah.
And then, like I said, a lot of them don't have a form, but they'll accept it on just a letterhead.
As a friend of mine would say, that would be too easy.
Yeah. That's why we have this business.
Yeah.
Yeah, we can't really knock it too hard because they're responsible for 20 years of business for us and for Pete.
I know, hey Joyce, I know with us, back when I was in licensing, I mean, it was very paper intensive. Has a lot more of the states gone online and allowed you to surrender that license? Because I know you can do that to Secretary of State. We've actually had an influx of electronic filings that we can actually file and dissolve, not necessarily dissolve, but surrender.
Withdraw.
Like a foreign certificate of authority. We can do a lot more of those. I've seen a lot more over the years. Have you seen that on the licensing side?
I don't get out there really much and see how the girls are processing it too much. I mean, I know it needs to be done. I know there's process for it. And I know what I see are a lot of forms and a lot of form letters. Mm-hmm. That's what I see.
Yeah. Well, I know that's one of the really good things. If you can find, like I mentioned before, the silver lining and all in the midst of all this COVID stuff is that a lot of states are doing whatever they can to make that paper go away.
Right.
So anywhere where you can file that electronically, they're like, yes, here. And even if you don't have like the electronic form on their website, they have like Texas. I know Texas is now allowing you to upload forms. So even though you have that paper form, you can at least upload it and get it to them electronically.
Right.
But just things like that. I'm all about electronic. I hate paper.
Yeah.
It's so flexible. You know, in one of our previous sessions, your supervisor, Sabrina, talked about that she actually, the agency snapped a picture of something of a signature, a state that was always wanting a wet signature, and they allowed a picture, and she
was able to email it right to them. And she was not exaggerating. She doesn't exaggerate anyway, but that was a very sketchy photo. I was like, I cannot believe a state is accepting that, but they did. And you know, like I said, we're all in this together. Whatever we have to do, as long as you know the end goal is compliance, whatever, they're going to help you.
Danielle, when we were working with you, I know we concentrated on the Secretary of State, Department of Revenue stuff. I believe y'all did the license cancellations. Were you involved in that, or do you remember that at all? Just on the insurance license cancellations.
Yeah, I wasn't specifically. We did have a licensed administrator in our office. So in addition to having help with some of the more complicated parts of the wind down, we still had a full-time employee that worked internally to do the licensing with the producers. And then we did get some help from the acquiring entity as well with that piece, because obviously it was really important to them that the producers were in good standing.
And on the agency licenses, you had to wait for certain business to roll over before you could allow those licenses to surrender or cancel, right?
That's right. So part of the transition plan needs to include contracts. What contract are you operating under? with the carriers? And when is that carrier contract flipping to the new entity? So that sometimes can take a bit of time. So it's another layer of just organization to get those things timed correctly. Because if your producer is appointed under your contract with that carrier in that state, you need to get all that flipped and coordinated.
Thank you. I just thought about that. I'm glad I asked you that question. So we have 6 minutes left, and I still have so much to talk about. So I'm going to try to just fly through this real quick.
This time we didn't announce a time limit.
Okay.
To need to leave, but hit us with it. We want to share as much of this vital information with the folks in the industry as
Pete,
possible.
how are you with time?
How are you, Pete? Okay.
And Caribou?
I may have to leave at 5 after, but
Okay.
And
I
Danielle?
won't make a fuss.
I still need to see that screen of yours, that background before you leave.
Danielle, how about you with time?
I have a call at 4:15, so I'll have to drop off about 10 after.
Okay.
Okay.
Thank you.
So Joyce?
Thank you all for joining us too. Do we want to shift focus to anyone, ask questions of any one of them? Because, you know, I'm here till the end, and like I said, I can just talk incessantly. So if you want to let one of them say something.
Sabrina, you have any questions there for them?
I actually don't have any current questions at the moment.
Okay.
So if you guys have any, please feel free to just drop them in the comments or the question form.
Okay, Joyce, the floor is yours.
Okay. All right. So on to the Secretary of State and Department of Revenue withdrawals. Sabrina, why? I'm going to ask you a question. You're not even really you're supposed to be our moderator, but I'm going to ask the moderator a question. Why would you want to withdraw or have to withdraw or should withdraw at the Secretary of State and the Department of Revenue? What happens if you don't do it?
If you don't do it, it doesn't go away. Those annual report filings at the Secretary of State and then those corporate tax returns at the Department of Revenue are still just racking up for every year that you don't file it.
Yes.
It's gonna tag it on.
Yes.
We've had, you know, speaking of those corporate compliance reviews, we have clients come in all the time, and the very sad thing about it is they don't even realize. You got me on a soapbox. They don't even realize that compliance is as big of a deal as it really is. So when you do those corporate compliance reviews and the aspect that what we do is we focus on the Secretary of State and the Department of Revenue, and what we do is we actually go and base it off of everywhere where they're licensed at the Department of Insurance. And so if we go out there and we check each of those states, you know, they've had this license since, you know, 2009, and say it was like New York and they were required to have that registration at the Secretary of State in order to get that license. Well, okay, well, they've got that certificate of authority and they've been selling insurance for all that time, but they haven't filed an annual report or filed any taxes at all. So once we give them that corporate compliance review and we go in and tell them, okay, hey, you need, just because they're not knocking on your door doesn't mean that they don't know about it, that they're not tracking it, and that you are non-compliant.
And I want to share with everyone that's here, like the reason that we developed the compliance review was not even so much to bring up or create another service for our clients, but it was also for ourselves, because our clients would come in and they would tell us, hey, I'm licensed in X states, you know, and I'm in good standing, you know, like I'm good to go.
We heard that a lot.
And then we would get into it, and then later on we would find out, well, you're out of compliance in such and such state. You never even told us you had a certificate of authority in that state. And so we said, you know what, we're going to do a compliance review, because we cannot take, they don't know what they don't know, right?
Exactly.
And so we were like, we have to do a compliance review when we're onboarding them so that we all know their status.
Yes, and when we're talking compliance, anytime we're talking compliance to anybody, we're almost simultaneously talking about Department of Insurance and Secretary of State. And so many agency owners or producers or, you know, those who are actually responsible, they can talk insurance. They don't know about the Secretary of State. They don't even realize they had to get a registration to get the license, and they certainly don't know that reports are due and all that kind of stuff. So when you know, you mentioned that a client's like, I'm good in that state. I've had so many conversations with a client. I'm good in that state. I'm good in that state. Yes, you are on the Department of Insurance side. Good job. But over here, you are not good in this state. You didn't realize somebody was not doing your returns for you. So yeah, definitely.
Can I emphasize something Arleen said? A real value to a compliance review is that, and I do it before you think about the transaction, is because as a lawyer, when I come in and I see and run due diligence and we see lots of loose ends, lots of dogs and cats, lots of problems, it just makes us, it raises questions on the business.
Right.
And so having those things tied down reflects well on the business. And I think it helps the transaction move forward because it speaks well to your company and it speaks to the value of the business. And if you can get those little dogs in it cleaned up before you get the due diligence in, I think it's dollars well spent.
And it saves you so much in the long run. So one thing that I did want to talk about real quick, and I'll try to make it quick, you know, is we do have a client that had an issue in the state of California. And he came to us. He had registered in California in 2012. When he came into our services, we were doing annual returns for him and corporate tax filings for him in the state of Texas, which is his domicile and resident state. But he said, don't do California. I've got a CPA doing California. And we were like, oh, good. Oh, okay, that's good. Well, you know, fast forward to 2018, and he says, well, it's time for me to get out of California. I'm not really doing any business there. I want to cancel the license and just get completely out of there. We said, okay, well, we'll send you a quote to cancel the license and take down your business registration. He's like, okay, but he's not putting it together. He's thinking just the license, right? So we sent him the quote. We said it should be this, you know, X amount to get you out of the state. What we didn't know was his CPA was not doing those corporate and franchise tax returns in California for him for all those years. 7 years they weren't doing it. And if you're in California and you're registered out there, you know the minimum just for the just to get to do business in their state, the minimum tax per year is $800. $800, yes. And you didn't have to write a lick of business, but that's what you owe them, $800. 7 years of $800 that was not getting paid. Obviously, we weren't getting a tax clearance. Contacted the franchise tax board. They sent the letter out. Here's what you need to clean up all 8 years. The client gives us $5,600. We send it off. We knew, and we told him to brace himself for it. Okay, well, we've done that, but now you're going to get a penalty letter. We just want you to know that. We don't know how much it's going to be. We can't even guess. A couple months later, here come the penalty letter. $4,600 in penalties for not having done those returns on time. He thought someone was handling it. They said they were handling it. I know in the conversation somewhere along the line, he thought he just didn't owe it because he didn't have any nexus in California. That didn't matter. It's $800, and you got to do them if you're registered out there. And the franchise tax board has your company name. They know you exist. They are expecting those returns and that money. Long story short, and I know it still kind of went long. I'm sorry. Is he's still not out of California. He did pay the money, but he went online and we told him, it needs to be paid. He went online and just paid it in one lump sum. Come to find out, he was supposed to pay this year separate from this year, separate from this year. Okay, so it's paid. The money's out there, and that's good. But he got another notice from the franchise tax board the other day. It still says he owes $4,600. He's at the end of his rope. He's just like, Joyce, please make this go away. So I shoot that. Joyce don't want to do that. I sent that to Tamika and said, Tamika, please help him with this problem, because she talks to the franchise tax board. And so she called them and, come to find out his lump sum payment, we just had to show that it was made and they were going to apply it to each year. So we're getting close. But again, this is something we started in 2018, and you find out due to lack of compliance and lack of not getting these reports done and paying your taxes, what kind of nightmare that turned into. He would have owed the $800 a year anyway, no doubt. But the extra $4,600, bless his heart, I wish it hadn't come to that. And that's the second time I've gone to California and tried to beg for a reduction or a waiver in the penalty, and they said absolutely 100% no, you don't fit the criteria for that. Yeah, the other one was much higher. I won't talk about that. But anyway, so stay up to date on your reports that are due. That's what I'm preaching about right now. Sabrina, talking about reports, you had a question about something about, I think it was annuals or something.
Caribou.
Caribou's got to go. Sorry.
Yeah. Signing off here from Richmond, Virginia, not California. Not California. I'm here in Richmond. I'm all good.
Thank you for joining us today.
Thank you, Caribou.
Thank you.
My pleasure. Thank you for having me.
So go ahead, Dave.
Okay, so we did have a question. Do I still have to process returns if I'm going through the withdrawal process?
Yes. So like I said just a moment ago, if you're registered, you've got returns to do that are expected of you, annual returns at the Secretary of State, corporate franchise tax reports at the Department of Revenue. So even from the point that you submit a withdrawal to the state, whether it's online, whether it's paper, doesn't matter. Like I said, some of those could take a long time. It may take a year to get out of, say, Pennsylvania. So if there is an annual report or a franchise tax, a corporate franchise tax report that's due, yes, you should absolutely do it. Because if you miss it, even though you submitted the withdrawal, then it's still a missed report. And they're still going to kind of ding you or give you a fine and penalty, and it's going to only further delay that tax clearance. And that's the last thing you want. Those take long enough when everything's in good shape. So yes, you do need to continue to do all of your reporting. For the annuals, I'll say this. In what I've learned, and this is just an educated guess, I'm gonna say maybe 1 in every 7 or 8 states actually want an annual as part of the withdrawal. Okay, you've got to do an annual for that year. For the rest of the states, if you're good up for your annual report, the annual is nothing more than just an update of your officer information, your address, your registered agent. It's not really the financial stuff, the annual reports. That's more on the corporate and franchise tax reports. So on the annual reports, if you are good through, say, 2019, you could most likely withdraw in 2020 without having to do an annual. So if you have an annual that comes due, today's May the 25th, gosh dang it, May the 21st. Today is May the 21st. If you have an annual that's due June the 20th, I wouldn't do it yet. And you've already submitted the withdrawal, I wouldn't do that annual yet, depending on, which state, but I just would wait till maybe June the 10th. And if you're still not withdrawn, then go ahead and do that annual, because it's possible that your withdrawal will come through before you process that annual, and that way you would have saved a little bit of state fee money. Corporate and franchise taxes, those have to be caught completely up, and then a lot of states also want a final return even after the withdrawal is complete. Do you agree, Sabrina? Even after the withdrawal has been approved and you've got a withdrawn status, they're still going to look for that final return.
That's correct. Mm-hmm.
Yes. Danielle, Pete, are y'all good?
I'm going to need to drop off for 4:15.
Okay. Thank you so much for coming on with us. We really appreciate it.
Thank you. Very valuable information. Thank you all.
Bye. Thank you.
Bye.
Thanks. Bye.
Well, Joyce, we can start, I think, tying this up. How much more do you got?
It's me. It's me. I got lots more to say.
Joyce, I think you're going to have to come back and do
Part 2.
Yes. That's so good. It's such great information.
Well, let me share just a couple things, if that's okay.
Yes, absolutely.
Sabrina, if you've got the links and you'll post them down in the comments, then I won't mess with that. I'll just talk about it real quick. I discussed earlier about POAs, power of attorneys, and tax clearances. I did mention Pennsylvania and Louisiana. They want to Department of Revenue tax clearance and a Department of Labor tax clearance. New Mexico wants 3 Department of Revenue, Department of Labor, and Secretary of State. That's another state that's taking a while just because of all the requirements to withdraw. And in Texas, this is important to know. Instead of like a POA, if you have the Texas web file number, you can use that in lieu of a power of attorney if you have it. New Jersey, I mentioned early in the call that I said I would share this, and I'm glad we're recording. I know a lot of people had to get off due to time. So if they're going to watch the replay, New Jersey does have that tax amnesty thing going on. I have it. No, I don't have it. Sabrina, thank you for sharing that. Just if you're in New Jersey and you're registered Secretary of State, please take a look at that. If there are any issues, if you want to get out, I believe they're allowing withdrawals through June the 30th without a tax clearance. Sabrina, is that right? Do you know? I know Tamika.
I wish it was forever. Yes. Okay.
And it's still taking a long time, but you don't have to have the tax clearance, right?
Right. I think they're waiving it temporarily.
That's a big deal, people. So if that's something you need to do, get out of New Jersey or take advantage of the tax amnesty, I would certainly do it. The last thing I have, and this is sort of a COVID update a little bit. I know we're not going to get too far into that, but I will screen share real quick. This is the American Institute of CPAs. They update this. You can see that right here. It was updated as recently as yesterday at 7 a.m. This, wow, there is so much information. It's 144 pages. I'm sorry, we won't go through that today. You're welcome. But I am going to say that it really goes into some pretty cool stuff. You know what, and I'm tax minded, and I guarantee you that this never even came to my mind, but look at this. 10 states provide that the presence of an employee working in a state due to the shelter in place restrictions would not create nexus for tax purposes in that state. I would have never even thought about that. I mean, I'm glad they did. There was something else, a summary of electronic signatures relief. Now, this is not insurance department. This is the tax side, okay? So we're talking Department of Revenue. 7 states permit electronic images, scanned or photographed, of signatures, and here's a list of those states. So anyways, all kinds of real good information out here in this this PDF attachment. Please copy and paste that link and you can go out to it. I wouldn't save it to a desktop, just always go out so you can make sure that you get the most recent version. And I am done. I'm gonna unshare my screen. I'm through talking.
All right.
So good.
So, folks,
we kind of love this stuff, right? This is my jam. You're on mute.
You know, strangely, we do find this interesting, don't we?
Yeah.
It is interesting.
Compliance nerds.
That's why everybody watches Law and Order and things like that, because there's so much drama in it, you know?
This is our joy.
I remember the first time we went to the Surplus Lines law group meeting. That was my first time, and I thought, my God, this is going to be the most boring thing. And it started at 8 in the morning, and it was for like 5 hours. And I thought, I really am not going to enjoy this. This is going to be hard on me. And I went in there, and I could not, like my heart was beating. Because there was so much action and what was going on from state to state, so much drama, so many things happening. I was like, this is awesome.
Well, that was like in the middle of the NRA.
Yeah.
So when we were going through all that and all the states were battling it out, and I'm going to do this system and that system, and yeah, it was pretty incredible.
Yeah, law and regulatory compliance is a lot more fun than you. If you're not on the receiving end, let me put it that way. If you're on this side, it's a lot more fun because you get to hear all the stories of what's going on. But folks, I want to thank you for joining us today. I just want to let everyone know that they can catch the replay on this on the Spot On Insurance YouTube channel. There's a large amount of information. Let me put it that way. I was going to say something else. A large amount of information on our Spot On Insurance website. We are constantly interviewing folks in the industry, movers and shakers in the industry, and wonderful education for you if you are part of this lovely insurance industry.
Again, if you guys think of any questions during the week, you can go ahead and send those questions to ccquestions@ilsainc.com, and we'll cover them next week. Next Thursday, we will be having which department? Well, I forget.
Surplus lines tax file. Oh, yeah.
Oh, it is?
No, no, it's not. It's
Christy.
licensing and compliance.
Yeah, yeah.
Oh, okay.
Yes.
Sorry, Becca. She probably just had a mini heart attack.
Right? Like, I'm not ready.
You could have blamed me. I started the whole thing.
And actually, the following week will be surplus lines, but it'll actually be on a Wednesday because one of the guest panelists will be coming to us from the Excess Lines Association of New York, and it's better for him.
Who is it?
It's Brian Prasad.
Awesome. I like him.
He's from New York, right?
Yeah.
Yeah.
And we're sending out more and more feelers to regulators and people in the States to get them in to talk and disseminate some of this information, especially during these, what they call trying times.
Yes, there are times.
So everyone, thank you for joining us.
Pete, thank you so
Pete.
much for joining us. And thank you to all of our panelists and our attendees for spending this time with us. And I hope that this was very valuable for you.
Stay safe. Take care.
Great to be with you. Thank you.
Bye. Thank you, Pete.
Bye-bye, guys.